All right, welcome to this session. My name is Barbara Gochalia. We are continuing from where we stopped in our last session, and we're looking at the reward system, where we saw that it comprised of a number of elements. We had looked at the total remuneration. We had looked at comprises the total reward. It comprises the reward policies and the reward strategy, which we had briefly looked at. And we had also briefly looked at the base or the basic pay, where we saw that it is the fixed salary for the salary earners or the wage for the manual workers. And we saw that it is affected by both internal and external factors. And for the internal factors, of course, there are these factors that have to do with for example, we looked at a performance appraisal, where we saw that one of the objectives of performance appraisal is to determine how much to pay, the payment plans, right, for the organization. And then also, of course, according to the performance, if that is the rating. And then the external factors, we looked at the market rates, for example, the influence of trade unions, where we see or we realize that these trade unions are advocates, right? They advocate for better welfare for the workers. It could be increment for the salaries of their workers in that particular trade union. It could be a group of medical workers, a group of teachers, and so on. So this this basic or base pay can be expressed, for example, annually, weekly, or an hourly rate. Some people are paid according to they are paid in hours, right? Especially for the manual workers. So this is called a time rate, right? So we also we also realize that the reward strategy also comprises what you call job evaluation. And the job evaluation will basically involve or it entails analysis. It entails job analysis, where at the end of the day, the job description for that particular job will be able to be put across. And this will be very important in terms of determination of how much to pay. Then this reward strategy also entails the reward system also entails the market rate analysis. We've looked at the labor market and how these forces of demand and supply determine. We've looked at how the forces of demand, right? The demand and supply, the law of demand and supply that determines where the forces of demand and supply determine the pay levels, right? So it is very important as the reward strategies are considered, that it also looks at the market rate analysis as such that at the end of the day, the pay levels are able to be determined. For example, we've looked at the efficient wage theory, which where employers make a payment that is higher than the market rate payment for labor. Then this reward strategy also entails grade and pay structures, right? It should entail grade and pay structures. We've seen these job grades, yeah, where different jobs they have different grade pay structures. They will tell you this structure. It's normally done in government, yeah, for government workers and even other non-government workers, private workers. So there should be a grade structure where they are telling you maybe for this kind of category of people with these skills, these qualifications, they are supposed to be paid this much. So that's what we call the grade and pay structures. It also entails contingent pay. And with the contingent pay, we look at extra or additional financial reward on top of, over and above, or on top of the basic pay. So this additional financial reward could be made in terms of the competence, in terms of the contribution of these employees towards the organization in relation to the kind of work that they are doing. So if this contingent pay is paid as it is consolidated, it is paid together with the basic pay as a lump sum figure, then it will be called a consolidated, it will be called consolidated pay, right? But if this contingent pay is paid, is not consolidated, in other words, it's not paid together with the basic pay, it's paid differently, it will be called a variable pay. And these variable pays or non-consolidated pay, contingent pays, for example, we can look at the cash bonuses. The cash bonuses are unconsolidated contingent pays, and they are also known as the variable pay. Are we together? So variable is an opposite of fixed, right? Fixed. If we talk about fixed costs, these are costs that do not change, right, with the level of output. When you talk about variable costs, these are costs that change with the level of output. So variable means change, and then fixed means not changing, isn't it? So with the basic, we look at the fixed pay, isn't it? And then with the variable, we are looking at these other extra payments that are paid, that are not consolidated. They are paid differently. They are paid separately from the basic pay. They could be cash bonuses. Remember, we are still looking at the reward system, and these are the elements that it entails or it comprises. And then we have employee benefits. So these benefits will be non-monetary. There will be non-monetary benefits or non-monetary rewards. And these could include, for example, pensions, sick pay, insurance cover, company cars, yeah, using those company cars, right? So all those ones are employee benefits. Are we together? So we've seen that total remuneration includes the financial benefit and the financial rewards and the benefits. And these benefits are those that we are looking at right now: the pensions, the insurance covers, and so on. It could also be the annual holidays, though those are employee benefits. Then the performance management, right? All these are entailing in the reward system, performance management, right? So we've seen we've looked at your presentations have been about performance appraisal and performance management, and we've seen that performance management basically it will look at how to make these workers do their work better, isn't it? It's aimed at making these workers improve, right, and do their jobs better, right? Then the non-financial rewards, those ones, they could be in a number of very many elements, right? For example, achievement. In the kind of work that you do, you might have very many achievements. For example, you could say that maybe you are working for a bank, and one of the achievements that you made were to maybe to make sure that those overdue loans that were not being paid were recovered. So that could be an achievement, and it's a non-financial reward. Then it could also be in terms of autonomy, independence, right? Recognition, just the recognition. It's not a monetary reward, but it is also a non-financial reward. Are we together? Then also you develop skills. In the kind of work that you're doing, you will develop a number of skills, leadership skills. So that is non-monetary, but it will be a non-financial reward. You also develop your career. Through these skills and trainings, your career is being developed. And developing your career is not a financial reward, but rather it's a non-financial reward. Then we've seen that total reward is the sum, right? Or it's an aggregation of financial and non-financial reward, right? So it looks at all those elements of reward as a coherent whole. So this is the reward. This is the reward system. This is a framework. This is a framework that is explaining the reward system, and it's according to Armstrong 2007, right? So it will comprise, the reward system will comprise all these that you've looked at. This is just a summary framework that is showing us all that comprises in the reward system. It will comprise job evaluation. It will comprise grade and pay structure, the market rate analysis, the contingent pay that you've looked at, which is the additional payments in over and above the basic pay. And then it will comprise the employee benefits, which are non-monetary, the allowances, right? The allowances, the performance management, and then non-financial rewards that we have looked at. For example, developing your career is a non-financial reward. Recognition, then it will also comprise total remuneration, and then total reward. Of course, we've seen that total remuneration is a subset of total reward. It will also be the reward system should also be in line. It should be aligned. It should be in line with the business and the human resource strategy. So the reward system should be focused in line with the business and the human resource strategy. So let's look at the total remuneration. This is just a framework that is helping us, or a table that is helping us to be able to understand these concepts more. So we've already seen that total remuneration considers the financial and the financial reward, the monetary reward, and the benefits, right, that are offered by the employer. So here, the total remuneration will consider the base pay, or the basic pay, which you have looked at as a fixed payment. And then it will consider the contingent pay, which we have looked at as an extra or additional payment over and above the basic pay. It could be in terms of bonuses, cash bonuses. Then this remuneration also considers employee benefits, like we saw in its definition. And also important for us to note is that remuneration is a transactional reward. It is a transactional reward, and the total reward will comprise both transactional rewards and relational rewards. So practically, total reward considers the total remuneration and the non-financial intrinsic reward. The non-financial intrinsic reward will be, for example, learning and development. That is non-financial reward. And then the work experience is something that you attain. It's non-financial. Are we together? So at the end of the day, the total reward will be it will be a summation, or it will be a combination of both total remuneration and non-financial intrinsic rewards, where total remuneration is the same as a transactional reward, and The non-financial intrinsic rewards are the relational rewards. So the significance of total reward, it will aim at allowing the organization to achieve, to meet the needs of the organization, but as well as the needs of the employees. So let's look at the benefits of the total reward approach. The benefits of the total reward approach. Remember, we've seen that total reward will consider the financial and the non-financial intrinsic rewards. So these are its benefits. Number one is that it helps in the motivation and commitment of the employees. So these employees, as long as they're receiving the total reward, that you're using the total reward approach, you'll be able as an employer to motivate them, and as well as increase their commitment towards their work. Also, it brings about, this total reward approach helps in a way that it creates good employment relationships, of course, between the employer and the employees. Also, it helps to meet the individual needs of these employees, right? Individual special needs. For example, there are monetary needs and the non-monetary needs, right? Then also it allows talent management. Of course, we've seen that higher rewards, yeah, or these total rewards will attract a pool of talented, skilled people that your organization will require, right? That your organization will require at that appropriate time. So let's look at the towers. Let's look at the towers pairing model of total reward. The towers pairing model of total reward. And this is just explaining the meaning of total reward, right? This is just a model that explains the meaning of total reward, which you've already seen, that total reward comprises the financial reward and the non-financial intrinsic reward. Now, we shall have, of course, we've seen that it comprises the remuneration as well as the non-financial intrinsic reward, where we saw that the remuneration are the transactional rewards, which are practically the tangible rewards. So these transactional rewards, or the remuneration that we've looked at, that consider the financial and the benefits, the financial rewards and the benefits. So the financial rewards, we shall have the basic pay, which we've already looked at as a fixed pay. Then we shall have the contingent pay, which we have already looked at as the additional payment over and above or on top of the basic salary. And then the cash bonuses, those are part of the contingent pay. We've already looked at them. And these cash bonuses, we've seen that they are variable payments. They are variable payments. And then the long-term incentives, right? The long-term incentives, it could be in terms of, this payment could be in terms of shares, right? Of course, depending on the type of organization it is. They could also be in terms of profit sharing. They could also be in terms of profit sharing. Of course, if this is in terms of the owners of the businesses. Then the benefits are those ones we've seen that they are the non-monetary practically. And these ones will be in terms of pension. We've looked at that. Holidays, right? Healthcare, it could be it could be, for example, medical insurance and other packages It could also be, in a way, flexibility is also a benefit, in a way that, for example, if the organization is flexible in a way, for example, to adjust its pay rates, to adjust its maybe salaries in line with the prevailing external factors like the macroeconomic factors, for example, you could find that the organization is flexible enough to adjust maybe the payment, the salary in line maybe with the cost of living indexes, or in line with, for example, the inflation rates, whereby, for example, if the inflation rate increases maybe by 5%, even the salaries can be increased by 5%. That can be a flexibility in terms of an organization being able to adjust its maybe salary payments in a relation maybe to the inflation rates, right? All right. We are looking at the Towers parent model of total reward, which practically explains the meaning of total reward. And we've seen that total reward includes a transactional or tangible, the tangible elements, as well as the relational or intangible elements, intangible rewards, right? So the relational or intangible rewards, we've looked at those ones. They could be at individual levels for individual employees, or they could be at communal levels. So the relational rewards at individual level, they will be at individual level, they would be in terms of, for example, learning and development, where it can be workplace learning and development. It can be in terms of training, right? So this is individual reward, whereby through training, an individual is gaining skills, an individual is gaining a number of skills. Then performance management, whereby, of course, we've seen that performance management aims at helping these workers do their work better. And then also career development, developing maybe your career as maybe an accountant, right? You could rank from levels, right? So developing your career is a relational reward, which is a non-financial intrinsic reward. So that is at individual level. And then at communal level, it could be through the work environment, where as employees in an organization, you're getting these non-financial intrinsic rewards in terms of the core values of, in terms of learning, the core values, learning and embracing the core values of the organization, attaining leadership skills, right? Getting a voice as an employee, being able to speak out as an employee, being recognized as an employee. All those are communal non-financial intrinsic reward. Achievement, you've already looked at achievement. It is a non-financial reward. Then also job design and role development, right? Developing your roles in terms of responsibilities. And then of course, at the end of the day, attaining quality of working life, right? Making your work, improving the quality of the kind of work that you do, being able to balance your life and work, and also being able to improve your talent, So those are communal, those are relational rewards, which are intangible, but at communal level. That is all about the Towers parent model of total reward, which practically shows us the components of total reward, where we see, or we realize that total reward will comprise the financial and the non-financial intrinsic rewards. So let's look at the reward strategy. The reward strategy, we've already looked at that briefly in the definition, where we realize that this reward strategy is practically a direction that helps the reward, the organization to have that helps to direct or ensure that the reward management is meets its goals, or it realizes what it is supposed to achieve, right? So a strategy will show, it will show the means, it will show where the organization wants to be in terms of maybe in a few years time, and it will that is the end, and it will also show how the organization intends to get there. That will be the means. So the end is where the organization wants to be, and the means is how the organization intends to reach there or to arrive there. So practically here, the reward strategy is showing us the vision of the organization, because the vision is where the organization wants to be in a few years' time, and the how bit of getting there is the means. So that's how the strategy, the reward strategy actually means. That's what it means. And what would be the reason for a reward strategy, or what would be the arguments for developing reward strategies? Number one is to be able to know, for the organization to be able to have an idea of where it is going. And then number two, this reward strategy actually helps in determination of pay costs, in determination of pay costs, right, for organizations. And also this reward strategy, it helps to create a positive reward, a positive relationship between rewards, right? A positive relationship between rewards and performance. So there is a relationship, there is a relationship between reward and performance, and having a reward strategy will help make that relationship a positive. And when we say positive relationship between rewards and performance, it means that when the rewards increase, even the performance will also, performance of workers will also increase. Then this reward strategy also helps, it helps to align the reward processes with the human resource processes. It helps to align the reward processes with the human resource processes. So let's look at the content of the reward strategy. The content of the reward strategy. It has what we call the broad brush reward strategy, the broad brush reward strategy, and this includes the aims of this broad strategic aims. They aim at this broad brush reward strategy aims at the following. It will look at introducing integrated approaches to reward management, whereby it will encourage continuous personal development for the employees. Also, it looks at flexible approach. There should be a flexible approach to rewards, right? To making these rewards, whereby by flexible we are looking at organizations should not be rigid. They should not be unwilling to change these fixed pay structures, these grading pay structures. So they should be able to adjust and change these grading pay structures, of course, depending on a number of other factors in an organization. So this broad brush reward strategy also looks at comparing rewarding in terms of employee contribution to their work, employee contribution in terms of the work they do for their organizations that they do work for, right? So it considers a contribution payment in relation to contribution of workers. Also, it considers supporting the development of performance culture for these workers as well as their competence levels. It also looks at clarifying what behaviors will be rewarded for, right? Clarifying what behaviors will be rewarded for. We know it's one thing. The challenges, one of the challenges of performance appraisal, right? I realized a few of you talked about that. A few of you were able to detect those challenges. But it's one thing to appraise an employee in terms of the performance standards, right? We've been looking at all those different performance appraisal methods, where we looked at the critical incident method, you know, the 360-degree method, all those ones you've been setting them. But at the end of the day, how are the traits, the character or the behavior of that individual? Because it's one thing to do all the work as required by your employer, but when your character is not the best. So the two should be aligned, right? The two should be aligned, because it's what, if you're doing all the work in the best way, you know how, you're appraised, right? And then you're the best, but your character is not the best. So at the end of the day, even character should be considered on top of the performance standards that we consider when we are appraising. So even this broad brush reward strategy considers the behavior of employees. So those were the broad reward strategy. This is the broad reward strategy. Of course, it looks at those elements, but for the specific, it will include these elements, but it will consider a little more, right? For the specific reward strategies, it will consider all the specific reward initiatives. It will consider the following. It will consider replacement of present methods, right, of contingent pay. For example, we've seen the contingent pay. It could be extra bonus, extra payment on top of the basic pay or the base pay. But here, with a specific reward strategy or initiative, it considers replacing the contingent pay method with the pay according to contribution, which also the broad brush strategy also considers. So you find that some of the initiatives, some of the strategies of the broad strategy are actually within the specific reward strategy, only that here we have a little more a number of factors that are included here. So also it considers specific reward initiatives, consider introduction of new grade and pay structure, right? Introduction, of course, being flexible, being able to introduce new grade and pay structure, and also being able to replace the traditional job evaluation schemes with the computerized scheme, right? So this evaluation can actually be computerized, right? It can actually be computerized, where you just fill in you asked ABCD, you fill in, and then at the end of the day, you'll be evaluated by a computer. So these specific reward initiatives, they look at better ways of job evaluation, from the traditional job evaluation to making it computerized scheme. And then also they look at improvement of performance. These are performance management processes to ensure that there is a development of a performance culture. Then also they consider the specific reward initiatives. They consider recognition schemes, right? Recognition schemes. Of course, this is a non-financial intrinsic reward that we've looked at. And then also they consider flexible benefit system. Of course, these we have seen that the flexible benefit system can be it can be under the benefits, under the total remuneration, as we've looked at under that model of the total reward system of the total reward. And also they consider equal pay. Equal pay, remember, when we are looking at we've looked at the philosophy of reward management, and we've seen that one of the elements in the philosophy of reward management is equal pay, whereby if people are doing the same job, they should be able to get equal payment. They should not get different payment, one getting a higher salary than the other, and yet they are doing the same kind of job. So these flexible reward initiatives, they consider equal pay reviews. Then they also consider communication programs to everyone. Remember, we've seen the communication programs over the reward structure. We've seen it under the reward philosophy, if you can remember. Then training, coaching, and guidance programs should be designed to increase the management capacity. So you realize that most of these elements of the specific reward initiatives are actually part of the what is considered in the reward philosophy. So what are the reward guiding principles? What are the reward guiding principles, right? So this should be the guiding principles for the reward system. Number one is that the policies and practices should be in line with the business goals. And we've seen this under the reward system, that for the reward system, these we've looked at that framework, that it should be in line with the business goals, right? Should be able to should be aligned with the business goals. And then also this principle, one of the other principles of reward, right? One of the other guiding principles of a reward management should be that at the end of the day, it should be the reward system should be able to motivate staff, right? And also make sure that they achieve a high performance culture. Then also it should maintain competitive rates of pay, right? Competitive rates of pay, of course, at the end of the day, the competitive rates will be able to attract a pool of talented workers, to your organization. And it should also be able to reward people according to contribution. You should be able, these are guiding principles as you develop your reward system. It should be able to contribute, to be able to pay according to people's contributions, according to employee contribution to in terms of their work to the organization. And also it should be able to recognize the value of everyone, according to recognize and make rewards in relation to the value that every worker contributes or performs in an organization. And also it should be flexible. We've looked at that. Flexibility is good, and we've looked at that when we were looking at under that under the total remuneration, that flexibility is a benefit. Flexibility is also a benefit, yeah. And then it should be able, of course, to consider line managers to play their role in terms of helping out in the reward decisions. Of course, these line managers will carry out, for example, the performance appraisal, and be able, of course, we've seen that One of the objectives of performance appraisal is to be able to determine, after you've evaluated these workers or these employees, you'll be able to determine maybe promotions, you'll be able to determine the payment in terms of maybe salary payment, the rewards. So line managers are key in this. So we've seen, or we realize, or if you can realize, that the reward guiding principles are also entailed, they are also entailed in the guiding principles, and the strategies, the reward strategies are all entailed in the reward philosophy, in the philosophy, the philosophy of the reward system, right? If you can recognize that. So let us look at the process of developing a reward strategy. The process of developing a reward strategy, and it has three basic steps. It has three steps here. We have the diagnosis phase, and then we have the detailed design phase, and then we have the final testing and preparation phase, and we have finally the implementation phase, the implementation phase. So briefly about these phases of formation of developing a reward strategy. Number one, the diagnosis phase. Here it means that the organization will look at the organization will look at the current policies, and the current policies and the practices will be aligned, will be compared to the goals, the reward goals of an organization, right? So it will be the diagnosis phase will practically be comparison between the reward goals and the current policies and the practices. And of course, at the end of the day, you'll be able to determine, the organization will be able to determine the gaps, right? What is that is what is the reward goal for an organization? And the current policies, have they been able to allow it to achieve those reward goals? If not, you look out for the gaps, and then improvement will need to be made for those gaps, to make sure that those gaps are filled, right? Or they are dealt with. That is the diagnosis phase. And then the second phase of developing a reward strategy is called the detailed design phase. The detailed design phase. Here, practically, the improvements and changes will be detailed, right? There will be the improvements and the changes that are supposed to be done will be detailed, or they will be detailed, and they will be tested actually. For example, if the reward strategy requires that maybe your reward strategy, for example, was to motivate these workers and be able to improve performance, right? To improve performance, because we've seen that the reward strategy, one of the advantages of the reward strategy is that it helps to create a positive relationship between reward and the performance. So you could find that the reward strategy for this particular organization is to make sure that at the end of the day, the performance of these workers improves or increases. So the question here would be, for the detailed design phase, if, for example, the gaps have been identified and these improvements that are supposed to be done have been also identified, then they should be tested. So, for example, if there is an improvement that should be made, maybe to increase allowances for these workers, maybe make them get holidays. Some jobs you don't get leave, right? So it could just be something that has not been done that needs to be done to make sure that performance improves, right? To make sure that recognition, just that can make these workers can make these workers improve their performance. So it has to be done. For example, if it requires training, the training has not been done. We've seen that training helps these workers to improve their performance in a way that they'll require those exceptional skills, and it's a non-financial intrinsic reward, right? So if it's that is the gap, and it is what should be done to improve performance, it should be done. Try out the training and see that after the training, after you've done a pilot testing, you've tried out. Pilot testing is sample. It is a sample study, right? A sample is something that you're sampling out to find out if it will work out. After you've done the pilot testing, then at the end of the day, if it shows you that it is working out, then you can do the final testing. And final testing can be now in terms of real training, if it is the training that is needed. And then finally, you will begin now to implement it, because if that is what is making performance to improve, maybe continuous training, then that will be it. So that is practically the process of developing a reward strategy. That is the process of developing a reward strategy. All right, so this is just a model of reward strategy. It explains what we have just looked at in the process of developing a reward strategy.